What's up, guys? It's January 3rd, 2025. That's 2 days in a row I've done that. Oh man, I'm still not used to it. Yeah, so we had a bull trend in the market. A tough bull trend. We're coming off a lot of bear legs. Daily, 15-minute, daily EMA, 15-minute daily. Bears 1, 2, 3. That's a 3-bar micro channel followed by a 3-bar rally. Now we have a 4-bar bear micro channel. This could be nothing but a pullback, and we could see lower prices. Or the bulls could be looking for their second leg 1, deep pullback leg 2. Bears could have a hidden leg 3 within here, so we could be looking at a wedge bottom leg 1, pullback leg 2, rally, pullback leg 3. So wedge, it's a form of a wedge bottom, and this is a tricky spot. I think we're in the middle of a trading range, so that makes it difficult. We don't actually know what's gonna happen until it happens. Bulls didn't get the close above yesterday's high, but it looks like we ticked above it, or we traded a few ticks above it. Is that yesterday's high or is that yesterday's third, second? Yeah, so they closed at yesterday's high. We did trade above it. It doesn't look like that on the daily, but we did. Which one's yesterday's high? Huh. So we went a few points above yesterday's high and reversed down and closed right above it, right on it. Didn't get past the close 2 days ago. And bulls definitely want to get above the EMA again. I think the chances bulls get above the EMA are good. I don't know how they're going to get above the EMA. And what do I mean by that? I mean, we can have like 1, pull back like 2, like this, and rally. We can go like that and rally. I think this bar's strong to get a second piece. I don't know if that second piece will come right away, or there's a lot of selling pressure. So, bears will want their second piece for this leg, right? They're going to want a leg 1, pull back like 2. It's going to be nothing but a pullback. If bears are able to keep this gap open below the EMA, then that's bearish pressure. We are range bound and gaps get closed. There's a gap right here that the bulls want to target because the bulls that bought these candles are now trapped. They're underwater. Bulls that bought here are looking for 1-to-1. I bought an options contract to go long here, so I am in profits now, but I am looking for another 1-to-1 of this bar, which will take us around just under the high. Yeah, that'd be an interesting spot. Might go sideways. We've had a big down, big up, big down, and now we'll see. We could become a the opposite of an expanding triangle. What is the opposite of an expanding triangle called? A constraining. I don't know the damn words. 15-minute chart. We can see the rally started overnight. We have strong selling pressure. Leg 1. Well, you can even say leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3. Nonetheless, these two bear bars are climactic, and we actually went sideways. We had a bear flag with a bullish breakout, head and shoulders reversal. We went sideways to up, and we broke out of this bull channel. When we broke out of this bull channel, we had a nice 3-bar micro rally, 3-bar micro channel rally. So 1, 2, 3. This is the start of the second leg. Leg 1, pull back. Leg 2 is hidden. It's implied within this bar here. And then we get the start of the third leg. Leg 1, pull back. Leg 2, pull back. Leg 3, we go sideways. And then we have another bullish breakout. 2 bars breaking out. Shallow pullback. Something that's interesting is we had a 2-bar breakout, but a 4-bar pullback. So not the best, I mean, each bar has a tail, so bulls were rallying and sell off. Then we have 1, 2, 3, 4, 5 bull bars in a row. That's a strong micro channel. The first pullback got bought, right? So here, 1 second, I'm about to cough. First micro channel gets bought with this bar right here. That's the first pullback, and that led to a higher price. 3 bars. Kind of weak. We didn't really get a measured move. It was late in the day. Price action is fractal, so we could just talk about it across any micro channel, across any time frame. It will act the same. I've actually started trading crypto now on the weekends. It's pretty fun because it's just fun. It's like micro channels. I'm just trading micro channel pullbacks. Moves a little slower. I'm still getting used to the ins and outs of buying and selling crypto. I'm trading Solana. Not I'm using Solana to trade meme coins, and I've been rugged a crap ton of times, and I finally found some like filters to use to avoid rugs. But these the coins that are rugs move really fast, so I was attracted to them, and then I got rugged like 5 times in a row and got smoked. I was like, yeah, I'm done with that. So I'm playing these slow movers now. Nonetheless, I'm still trading. I'm still trading micro channels and pullbacks. Price action is fractal. It's universal. Breakouts happen on every stock, every time frame, every meme coin. And so I think it's really important to get the concept why I'm nailing down one thing, because if you would have told me last year I'll be trading crypto, I'll be like, no, I don't trade crypto. But it doesn't even matter. It's just something to do. It's the same thing. It's the same thing. Like, let me see. Let me see something right here. I don't want to talk too much about crypto, but I just want you guys to really understand. I wish I could do something here. Hold on. Let me see. I might mess up this video. Put this here. Okay, cool. It worked. Can you guys tell me the difference between the micro channel I just talked about on the daily time frame or 15-minute chart and this micro channel? I bought this dotted line is my price line. I saw this breakout and pullback, so I bought it. It rallied here, and now I'm just sitting in this this purple line is my theoretical stop, which is but look, deep pullback, we rallied another 3 legs. The market right here is starting to sell off. We're trading at range highs, and does it even sound any different from when I talk about the E-mini? No. That's why it's really important to focus on one thing, because eventually we can just have free will of what we want to trade. You can't short crypto, which I really wish we could, because it's way easier to short crypto. These guys are silly sometimes. Anyways, let's talk about the daily chart. Just want to throw that out there that there's a reason I keep focusing on one specific thing, and I hope you guys can apply that to your trading and hope it works out. You don't have to trade 3 bars in the pullback. You can only like range bound plays, so you start fading bear bars above the bull channel for 1 ATR. That's profitable. That's harder. You're gonna have to be willing to scale into a losing trade more often. But there's so many ways to, as long as you find a trade you like based off the market cycle, it will be repeatable and it will work. As long as you're not fading bull trends and you're not buying the dip. And if you're buying the dip on a higher time frame, you're investing and your outlook can be longer, and there's all this. Yeah, I'm not gonna talk about what I'm not doing. What I'm doing is trading 3 bars in micro channels. So yeah, I hope you guys are having a good weekend. It's the 4th here. I'm just I got caught up at work yesterday. Gap up, big bull bar, bar 1, follow through, breaking out above the higher time frame EMA. Bar 2, another strong bull bar. So now bulls have momentum. Bar 3, bad follow through. Momentum is stopping momentarily. Bar 4 puts a dampener on the bull trend. Bar 4 also puts the market range bound. The market goes range bound, and then we go sideways for about an hour. Here's a double bottom and a double top. This is breakout mode. Bulls are getting trapped, bears are getting trapped. One side's gonna have to give. We have a leg 1. This is a weak bear bar. You could count. There is a bull bar on top of this bear bar, right? So that's still a 3-bar micro channel. I didn't trade it, but there's 3 bars here. Pull back. You could buy bar 6 for a scalp. You have to be very fast. And then look, you could fade bar 6 for bar 7 for a scalp. I would stick to trading with the trend, but nonetheless, we're range bound, so fades do work. You could buy bar 11, and then you go for 2 legs here, leg 1, pull back leg 2. We're trading at range high, so you get out, get up a little bit. We're closing on slow, bar 17. You see 18, 19, think that's strong enough. Not the best breakout. Sell off 20, and then look at 21, 22, all the way up to bar 29. We have a 7, 8 bar rally, trying to get a second leg. And if you missed this, don't feel bad. This is a breakout. This is the setup for this trade right here. This is 37, 39. I think all the way to the close right here is pretty good. Let me make this a little bit bigger. We do have multiple gaps staying open, so now we know that limit order bears that got short here are trapped because there's a gap. They do have a chance to get out, so it's not the best, but when they get out, they buy back shorts, and that helps the bulls. 9-bar breakout, trying to get continuation. We are far away from the EMA, and there's lots of selling pressure, so bears are going to be looking to short new highs. bulls are going to be looking to take profits because they have to reduce their position. And that starts to pull back 30 through 36, 37. Leg 1 for the bears, pull back. Leg 2 for the bears, pull back. Leg 3, wedge bottom into the EMA. This is I think this is a really nice setup. If I had to pick, this would be the setup of the day. Breakout, bull flag into the EMA. 37 touches and bounces, and then we have a higher low put in with 40. 3-bar microchannel rally. 43 breaks the low here, so now we have a leg 1, leg 2 perspective. Leg 1, pull back, leg 2. We have 8 bars. Let me actually count. 1, 2, 3, 4, 5, 6, 7, 8, 9. We have 9 bars in this rally. So then our calibrated expectations, what we expect out of our trade, should be about, we have 9, so that's 18 bars. We're going to look for 18 bars in 2 legs after this trade. So then that'll put us in leg 3, leg 1. So pull back. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. You might be able to hold through that because we read the context. We know we're in a bull trend. 1-to-1 is not even met. We're more sideways. Again, we've had a lot of selling pressure, so bulls got some work to do. But you can start to think like, okay, I've been in the bar. My calibrated expectations are met. I think this rally is strong enough to get a second leg, so maybe I hold for this. And then you see 54, 55, 55, 56, 57, 58, small pullback, and you go again. Once you start to see this, I think you got to be out by 67, no later than that, or you're going to start to lose profits. Because we want to be calibrating every bar that gets printed, we want to update our expectations. So back to bar 43. I didn't even do a mic check. I hope this mic is on, man. That'd be funny if it's not. That won't be funny. I'm going to hit my head against the wall. 3 bars, pull back, another 3 bars. You can look for 6 bars. 1, 2, 3, 4, 5, 6. And I'm willing to bet 1-to-1 was met. Yeah. So that really lines up. This is exactly what I was talking about. 3 bars and a pullback. So now we're looking for 6 bars and 2 legs. Leg 1, 47 pullback. Leg 2. And you get a leg 3 right here. 1-to-1's met pretty quick. 1.5 bars met. This rally is strong enough to get its second leg, but now we're coming into the third leg of the trend, and leg 3s are typically legs in a range that just have not been put in. We're still waiting for the market to wrap back around. 54, we have a pullback, bad close for the bears. Bulls bought that and went for another 2 leg. This becomes a second leg trap because we know we're in leg 3, so it's only a matter of time before a top gets put in. And I don't think it's out the picture to expect an all-day bull trend, but those only happen about 5% of the time. So I don't think you're wrong for thinking, oh, we're going to trend higher. But I think at 67, you have to be willing to get out. The market's almost closed at 72. You know, you could trade 78 if you want to. You're kind of crazy. 1, 2, 3, 4, 5. Okay, we have 5 bear bars after a bull rally. Same concept, right? Price action is fractal. After we have our microchannel against the microchannel, we are range bound. So the market goes range bound and it tags the 54 low. You could trade this leg 1 pullback. It's a double top. This is not my preferred trade because we're against the market regime and an all-day bull trend. Nonetheless, leg 1 pullback, leg 2 into range lows. Pretty cool day. Hope you guys are seeing the power of reading the markets from a very consistent perspective. There's that 1-to-1 of the breakout of the range, popped a little bit above it and reversed. And then another 1-to-1. So same exact bars, but we put it at the low of the range. That's met here, but you guys to do a very deep pullback. Your stop is not hit. That's an appropriate stop below bar 81. Yesterday's 81. Or maybe you put it here. 1-to-1's met. We see this rally and we like it. We're gonna go for 1-to-1 of here. Put it above 21. That's met. What is the day's range? 62. I think yesterday was like 105. So the range is contracting. So keep that in mind going into Monday, that the range is actually not expanding, it's contracting. So it'll be interesting to see. Range bound price action, big up, big down. We'll see what happens. I was cautious about today's price action because I said in the Discord, hey, be careful, we got an expanding triangle right here. I don't trade on Fridays because I go to my 9 to 5, which I'm looking to cut hopefully soon after I'm done taking this one class. But yeah, expanding triangles are dangerous. this had a bullish breakout. That's great. I hope the guys caught that and the gals caught that. The guys and the gals, they're not just guys in the chat. The one-to-ones met there. And then we did this earlier. The one-to-ones not met, but we also have to ask ourselves, how much can we get? And the reason I'm saying that is because we had a 105-point range yesterday. So I don't think it's unreasonable to look for this. But the fact that we got half the range, we got like what, 65 points or something. That in itself is, hey, something's going on. The market's trying to contract, right? Because the market goes from expansion to contraction. So please keep that in mind. But we still have some more one-to-ones based off the micro channels. I keep telling myself I'm going to draw the gaps in first, and I don't. But it makes more. I'll just write a note for the next breakdown on Monday, because then the full picture will be printed before. Yada yada yada. Words. Okay, let's draw the gap and call it a weekend. I got some studying to do. Hope you guys are studying. Having a good time. Gap gets put in range bound price action. Gaps get closed. So that's one way we can read the markets through context. If gaps are not staying open, gaps are getting closed. That means we're range bound. This is a good transition. We see these gaps are getting closed. There's not a gap there. No gap. Okay, we got a gap here. Bulls closed that gap quite quickly, and they put in their own gap. They put in 2 gaps in a row here. And look, these gaps get tested, but they stay open, guys. This is a trending market. We have 2 open gaps with pricing staying above. We have another gap, and this gap stays open momentarily. It gets tested, and then gets tested here. Some people will say it's closed. I don't put a hard stop on like, oh, the gap got tested, it's closed. Oh, the gaps, I know for sure these are open, and I'd say this is a test. I like to say a gap is closed if there's a, a bear bar closing like that, closes it. It doesn't really get closed. It stays open with tails because there's limit orders here. This is where bulls are putting their limit orders, so they're gonna get tagged and rallied. See, look at 78. Something interesting. Earlier in the video, I said that in leg 3, it's range bound price action. And look here, we have a gap that gets closed right away, right? And just like down here, range bound price action, gaps get closed, and trending behavior, gaps stay open. So if you were to ask me where was the trend today, I would say somewhere around here was the trend. That's how much trending behavior we had today. These bars, and then the rest was range. Invert. That's how much trending behavior we had. It's really interesting to think that, that doesn't mean this is not where we're going to trade. Bar 21 is a great trade. Bar 37 is a great trade. Bar 43 is a great fade. I think bar 12 is a good scalp. I think bar 6 is a good scalp. I think it's a hard scalp. I think just as much as it rallied, it could just collapse. So it's harder, in trading ranges, the probabilities is more 50-50. When gaps stay open, the probabilities are in our favor. And that's why I trade 3-bar micro channels, because the probabilities stack with the price action, stacking with the market cycle. Guys, I hope you had a good one. Hope you have a safe weekend. Be smart. Study until your eyes bleed. Have a good one. If you learned something, share the show. I'll talk to you guys in the Discord. Have a good day. Bye.